was going to talk about today is a question that somebody asked me recently because it's their first year that they've had a business policy, and they got a letter that talked about how they were going to be audited. And when most people hear the word audit, it scares them because we think of we think of
I'm from the IRS. I'm
here to help you,
right?
And so, and once we explained, they remembered what it meant. They just hadn't used that word before, so I thought I'd talk about that today. And this has to do with business policies, and it's mostly general liability and workers' compensation. There are others that can be audited, but those are the two most common. And when you start your policy, you give the insurance company or your agent what you estimate. For example, your payroll is going to be for the year. Okay. So, I start out and I say I'm going to have one employee and I'm going to pay them this much and this is what my payroll is going to be. Well, at the end of that policy period, the insurance company wants to know what was your payroll because that premium is based on payroll. So if you hired 2 or 3 more people and it went up, then you're going to owe. Same thing with general liability. Some of those are based on payroll, some of them are based on sales. It just depends on the type of business. So the advice that I have, that's what an audit is. It's your premium is based on an estimate, and at the end of the year they want to find out what it really was so that you can either pay more or sometimes get a refund, just depending on the situation. But the important lesson about this is to know ahead of time how your policy works, where your premium comes from, so that first of all, you can keep good records. You need to keep good records. You need to make it easy on the auditor when they come in to do your audit. And sometimes they do them on the phone, so there's all different kinds of ways. But you want to keep a record of your payroll, your sales. If you pay overtime, you need to keep that separately. That's very important. If you use any kind of subcontractors who have their own insurance, then you need to have a certificate of insurance in a file that shows that they have general liability, that shows that they have workers' comp. All of those records are super important so that when the auditor comes in, it's easy. They don't have to dig. They don't have to ask you a whole lot of questions. And another tip that I have is if your business is changing throughout the year, whether it's growing, whether you're cutting back, whether you've started doing something new, talk to your agent if you don't want to have a big audit at the end of the year, because at the end of the year, you just paid your renewal premium, and then a month later, you're going to get a bill for a big audit. You can increase those estimates throughout the year or decrease them if your business is changing in that direction so that it doesn't hit you at such a big pop at the end. And then the other thing is that some forms will actually let you report actual payroll for the prior month or the prior quarter. So anyway, the thing I wanted to talk about today is what is an insurance audit, and that was a brief explanation, and we can, if you have more questions, you can call us, we can go much deeper into it. But the key to everyone happy at the end of the audit is to have your records all in order, and make it easy on the auditor so they don't have to start digging and pulling and finding out things. So,
all right, how do we get a hold of you, Sonia?
You can call me at 940-549-2525. You can come see us, second floor, Sierra Bank Building, or visit us on the web at www.bryanins.com.
All right, thank you, Sonia. Sonia Edwards on Y100.5 FM.